Hi folks, in this video I'm taking you through my entire stocks and shares investing portfolio for February. We're coming around to ISA season, and so it's nice to start to get an idea of what we want to invest in going forward into 2024-25. So stay tuned, it's all here. We're just going to get into it. First up is Vanguard. Vanguard is the oldest stocks and shares ISA I had. It was the very first one I went and got when I decided that I was going to get involved in investing this way. This month we've gone through a bit of a landmark of £20,000. We're sitting at about 20,500. The coolest thing about this is that I haven't put a penny into this from about February of 2021, and really that's just the market doing its own thing from round about here. So we've gone from about 15,000 right up to about 20.5 as it stands. So it's been pretty good, COVID and all. This one has returned me about £6,500 there, and a personal rate of return of about 52.99%, as it says here. So in the holdings, you're going to see about 7 ETFs here. I have things like the FTSE Emerging Markets, FTSE 100 in the UK here, All World High Dividend Yield and All World Index, VWRL, very popular, FTSE Developed World Index, and S&P 500 accumulating and distributing. So what the plan here is going to be is that I'm going to try and move these from the distributing, which is largely what I've got, the big holdings here. I'm going to turn those into just the accumulating because I'm just reinvesting all those dividends anyway at this point. So 7 ETFs seems a bit top heavy, and I'm a little bit top heavy probably with the Western world here, but that's fine. That suits what I want for right now. But I am going to try and condense this, squash this down a little bit into something a little simpler. Vanguard lets you use this Insight tab here, which will show you all about your ETFs and things whenever they're sort of merged together into one unit, if you like. And as I say, very heavy on the Western world here, 71% North America, 8% UK and 7% Europe. Which is pretty heavily weighted in one direction. It shows you your top 10 investments as well, which is pretty cool. And it'll show you your sectors that you're allocated. So it's up to you really how you want to spread that around and do what suits you. But as I say, I have plumbed for these particular ETFs, and you're going to see that as a bit of a theme throughout my entire investing portfolio here. All right, let's move on to Trading 212. Oh, and it's another one that is mighty close to the £20,000 mark, 19,992-ish, or thereabouts at the point that we are recording. This one's seen a pretty healthy return as well, up over £2,000 now, as you can see there. So let's have a quick run down these investments and what's in here. We've got Amazon, which has seen a bit of an uptake recently. They've obviously got their retail arm, they've got their cloud computing, they've got Prime, they've got Prime Video, all that kind of stuff going on there, so I'm happy to hold Amazon for now. Coca-Cola is another one. It's a pretty solid company, been around a long time, pays a bit of a dividend, continuing to grow, as they do, so I'm happy enough to hold on to that one as well. iShares Electric Vehicles is the next one, and it has been a bit of a disappointment for me over the past few years. Only up there 1.32% when you consider what even like a global tracker's been doing. This is one that might get packed in pretty soon, and I'll tell you why. Because it's expensive compared to something like the S&P 500, and it's just not as diverse as probably how I want to be going forward, so that one may well get kicked to the curb pretty soon. The same for its chum here, the Global Clean Energy Index. It's obviously down by 20% or so, but for the same reasons. Not the fact that it's down bothers me, but it's very expensive to hold on to, and it's another one that hasn't really kicked on as I expected it would. However, Legal & General is next, and you're going to find that one in most UK portfolios. They pay a pretty high dividend at the minute relative to their falling share price, but in the name of moving everything towards ETFs, I do plan to move this on fairly soon. Microsoft, massive company, not going anywhere, up 44% there. As you can see, that's been one of my better performers over the years. National Grid, the world's most boring stock, possibly. Energy provider here in the UK. They pay a pretty stable dividend as well, and their price tends to not move around too much, so if you're in for dividends, that might be one you'd be interested in looking at. Palantir has been on a bit of a flyer for me recently. As you can see, we're up 87% at the time when I moved this into my ISA. It's another one, a single holdings I'm not a big fan of these days, so that might well get moved on pretty soon too. Unilever is one that you're going to find again in most UK portfolios. It's a dividend pair. It has all those products that people use every day. You're going to find their stuff in your kitchen cupboards, in your bathrooms. Nothing much happens with this as well. It pays a bit of a dividend, and everyone seems to know where they are with Unilever. So then we get into the real guts of most of my investments, and it's this series of ETFs of Vanguard FTSE 100. We've got an all-world high dividend yield. We've got an all-world tracker, FTSE developed world tracker, an emerging markets tracker, and the S&P 500. It is pretty heavy, again, towards America and the West, just like my Vanguard portfolio was. The interesting thing about buying these Vanguard ETFs on platforms like Trading 212 and InvestEngine is it's actually cheaper to do than to actually buy them on Vanguard, and that's due to the platform fee of 0.15% that Vanguard charge regardless of the products that you want to buy with them, which if you're starting or thinking about getting started investing coming up on this ISA season, platforms like Trading 212 or InvestEngine might be a place to do it pretty cheaply to dip your toe in the water. There are no platform fees if you look after these things by yourself and you don't take any of the managed products. There's links in the description for both of these down below. Check them out if you're interested. So that's us for Trading 212. We'll look at InvestEngine next, but 19993 at the point of recording. InvestEngine is where I have my ISA this year. There's been a lot of cool stuff happening in InvestEngine over the past year, and there's going to be some offers, I understand, coming out for their ISAs 2024. Looking along the top of their little banner here, you can see that pensions are now available on this platform. They're offering SIPs. If you're interested in seeing a video about that, do let me know in the comments below, and I'll see about putting that together. But we're here for the Stocks and Shares ISA, so a quick glance, we've got 16992 in here, and it's largely based around this self-managed ISA. You can see of late it's been on a bit of a tear, but basically I have one fund in here, and it's VWRL, and this is just this global index tracker that is offered by Vanguard. So a bit like the Vanguard platform, you can scroll down and see exactly what you're investing in. So Apple is the biggest holding in this particular ETF, followed by Microsoft, Amazon, and so on. The regions pretty heavily weighted towards North America again, it's nearly 58%. So it's a very, very simple strategy in this particular platform for me. It's the way I think investing should be. It's what suits me best. I can simply invest in one fund here, auto invest any cash that lands in this portfolio, and we are flying. It's really takes up very little brain space for me and lets me get on with my day-to-day stuff without thinking too much about my investments. So there we are. That's InvestEngine at 16992. That does include this managed portfolio challenge I'm doing with InvestEngine, MoneyFarm, Nutmeg, and Lightyear, and I'm really hoping to put a video together for that to let you see how these managed portfolio options are matching up against each other. 16992. Lightyear is another that I've been playing around with for a little while. It doesn't offer an ISA at this point in time, but I tried the application some time ago, really liked it. It's very, very quick, it's very clean. I'm using it in a little experiment at the moment alongside a few other providers for managed portfolios. This is kind of acting like a baseline, if you like. I'm purely using it to buy S&P 500 and use their money market funds as a basis for comparison for how other managed portfolios are stacking up against a very simple investing strategy. So that's why I have this one in the main. It's sitting at the moment at £1,449, and there is really just two holdings there, the S&P 500 and BlackRock Sterling Liquidity Fund. That's it, short and sweet. Quickly, we'll take a look at Nutmeg and then MoneyFarms. Nutmeg here is sitting at 746. I've contributed £700 to that on my own dough, and I've made £46 in that time weighted return of about 7.37%. One thing I have noticed about Nutmeg is that from the point in time when it leaves my bank account to when it actually gets invested, it takes a little while. They only invest your cash in this particular scheme that I'm using twice weekly. So if you're the kind of person that likes to have their money straight in there and working for you immediately, this particular offering from Nutmeg might not be for you. However, what we're interested is in totaling up my entire savings or entire investments for this year. So we are sitting with £746 in this account. The headline value here is £739.68. Again, it's a £700 contribution from myself so far and a profit of £39.68. So this is entirely managed once again. And when we click into this one to see exactly what MoneyFarm have invested my money in, I can go down and see that there's a fair chunk of bonds in this one, and mostly developed markets equities and emerging market equities. A little bit of real estate and commodities, which is quite interesting, and a little bit of cash. still hanging around. Clicking on the portfolio composition, you can see again exactly everything you're invested in. Since this is a managed account, I haven't really paid too much attention to what's in here, and it should if this becomes your main method of investing, but for me it's just a little bit of experiment, as I said before, and hopefully I'll have a video out on that pretty soon. Alright, so there we are. It's been a decent month. The portfolio as a whole, when you smash that all together, is pushing £60,500. We are on the road to 100k. That was the goal when we started out, and we're making half decent progress at this point in time. If you have found this useful, please leave a comment below and let me know what it was you liked about it. I hope that if you've been considering investing for a little while, this video might give you a little bit of inspiration, or it might give you some food for thought as to where you should be putting your money, or where you think you might want to put your money. Any questions at all, leave one in the comments. Let me know how you're doing. Thanks for watching. I'll see you next one.